Good evening all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Monday the 22nd of March 2021. So let's talk about the markets, but before I do, one favor: if you like these videos, at least hit subscribe on the YouTube. It'll tell you when they come out because they'll tell you get a notice like that. If you have a comment for me, leave it. If you like them, hit like, because what that does is help us with what? Our algorithm placement, and we want more viewers, obviously. So we've got to see a red in GameStop. Look at AMC. So they open up for the first real weekend, and I would think that mentally any number's a good number because it's better than not being open and down $1.44. So you got that to fight with. Stock indices basically were higher. We have Fed speak. A lot of the Fed presidents are out talking this week. We have Fed Chair Powell on a date with Treasury Secretary, ex-Fed Chair Yellen. So the two of them have to speak before some committees on Congress. We will find out what they do. But as usual, they do release text of what they're going to say, and then they get asked the questions. And it's employment, employment, employment for the Fed Chair. That is what he's focused on. He has to be focused on how does he get the unemployment numbers down. Inflation, that's his other goal, to get it up. The rest of it's up to Miss Yellen. That is not the Fed's job. That is the Treasury Secretary's job. So should be quite interesting tomorrow, and the markets were sort of quiet in front of that. When you look at GameStop, all it's done is fall back to the 18-day average of closes, trying to figure out what next. The trend is down, the bias is up since price is up and over the 18-day average. Any close under that will turn me bearish, the market, looking for further lows. You still have targets down here that could be made. I'm not saying they will. Momentum down, bias up, trend down. AMC, you stepped out of the uptrend today. You broke what? Got through the 1234 level. Now, if you look at the embedded reading, it's hanging on by a sliver. The market, if it's not up and early up tomorrow, you're going to get a reading under 79 here, and that could cause some selling. If you have enough selling, the odds are you're going back to 1062. So this is probably an area where some liquidation is stepping in. Who has to come to the rescue? The bulls. The onus is on them. In all fairness, this is a market that's come from the let's call it 550 level, all the way up, tripled, and is giving back some. Okay. When we step over to PAVE, you can see how it's come up. And I said, look for a bit of a correction here. And it's exactly what you're getting. And that's because you have a higher high and a lower low. We saw that coming about. We're also looking at a market that is trying to fight to stay at the 18-day average of closes. We're looking at a market that hit the upper Bollinger Bands and backed away from it, and that was the interesting part. It also triggered this. Let me show you when it triggered it. This day was an outside day to the upside. I have a rule. It's that if you take out that high within 2 days, the market's normally saying it wants to break down. Now, here was the snooker. You came back the next day and made a higher high, which you normally don't do, and then you broke that day's low again. So now what happens is you put the play back in, and watch, knocked everybody out and came through it, and now you're right back down to the number. Very difficult, uneasy chart there. You don't see that too often, days like that. But in any case, when you look at the stochastics, they've turned down. That's calling a pullback to the 18-day average for regrouping. When I step over to THCX, all I heard today was all the cannabis stocks, they're in a correction mode. Well, we know that, but they spiked in February dramatically higher. They've given back roughly, I don't know, 45, 50% of their gains overall, and they're just sort of now trying to consolidate that and see what they can get a go for again. When you look at SMH, you've got a pattern of higher lows, higher highs. The market has got a thrust up, but it's overbought already. I'd look for stiff resistance at 248.50, but you might not be able to get there because you're overbought. In XLI, you stepped out of your trend. You lost the embedded reading. You broke through a swing line low, and I would say the market's in for a bit of a harder time right now. In the energy sector, straight down. So you're getting a vertical price correction, probably due to the COVID situation in Europe where it's getting worse. Germany going back into forms of a lockdown. Paris is already there, as you know. Other countries in Europe doing the same. They don't have enough vaccine, and now they're fighting over it, which was not a pretty fight today if you saw it going on between the UK and the EU. And it's ugly there. Also, the UK, if you looked at their shipments to the EU, whiskeys and so on, down rather dramatically. The EU's not making it a pretty time for them. You knew that was going to happen. When we come to QQQ, higher high, lower low. So you're churning. That's how I'd view it. And even here, you're playing in the 70s, just a churn in these charts going on. The emerging markets, I don't care about the churn. You got an embedded reading. Until the red line closes back under 80, I think the pros are buying, looking to see if they can get this up to 77.31. Eventually, I'm going to be saying, can they get it through this to lift the market to higher levels? I think that'll come when we get a breakthrough in the vaccine counts there. And I'm talking Europe. As for the GLD, well, it's still in an uptrend, but it's overbought as can be. It's used a lot of its power. I said that over the weekend, too, in my subscriber video. I can make an argument if it wants to get up here, but it's certainly not catching buyers that want to come in on an overbought condition. In the gold miners, it's the opposite. They're acting like they want to roll to the downside. Any move under 33.46 could be a signal of lower highs, lower lows that might carry you back to the 18-day average of closes. TLT, as the market was coming down into the Fed meeting, what did I say? I think the smart money is going to get out of the market. And that's basically what happened, and watch. After you heard the Fed speak, the market had already tested the Fed. And so many people talk about that. It had done it. So you're giving back some of the yield. Okay, but the game hasn't changed. It's still going to be one where the long end of the curve yield tries to move higher as the short end stays until the Fed decides it's not going to stay that way. Last in FXE, you got back to the 200-day average. You've heard me say this over and over. When you do that, that's often a spot where traders take money off the table because it's a long-term average. You got there on Friday, you gave a bounce today, but you haven't changed much one way or the other. I'm working hard on finishing up the enhanced Bollinger Band course. I recorded all weekend. Today I did another 2 of the chapters, and I did chapters on the weekend. I have 1 to 2 chapters left, which means there should be a release this week. Tonight I have to, actually it'll be in the morning, I prepare for my IT people to prepare how it's going to play from our website, the cost I've given them already. I can tell you that current paid subscribers to my research, any of my packages, will get a discount on the course. So look for that to be coming through it. Past paid subscribers, no. You've got to be a current paid subscriber to my research to get it. It'll be a real nice price for you, decline on it. So I can say that I'm trying to get you down to a point where most of your month is close to free for the video subscriptions, not for my written subscriptions or my commentary, but for my videos. That's what I'm trying to give back, the cost of the subscription for a month. So that's what I'm working on. I'm Ira Epstein. You have a great day. I'll see you tomorrow.